If you observe carefully, you'll realize we're living through an extraordinary historical moment. The US dollar, which for decades has functioned as the cornerstone of the global financial system, is undergoing a silent but profound transformation. This isn't a prediction, it's a logical consequence of patterns that history has taught us repeatedly. When I look at today's data, the massive money printing, the exponential growth of debt, the shift in global power relations, I see something I've already witnessed in my studies of the last 500 years of economic history. What's happening with the dollar isn't an accident. It's part of a larger, predictable cycle that determines the fate of reserve currencies throughout history. And if you understand these patterns, you can position yourself appropriately for what's coming. Today, I'll explain exactly what I'm observing, why this is happening now, and how I'm repositioning my own wealth to navigate this historic transition. Because ultimately, if you understand the incentives behind economic decisions, you understand the behavior of markets and currencies. The history of reserve currencies tells us a fascinating and repetitive narrative. Over the past 500 years, we've seen 5 major currencies dominate the global financial system. First, it was the Dutch florin in the 17th century. Then the British pound sterling dominated for more than a century. And since 1944, with the Bretton Woods agreements, the US dollar has assumed this privileged position. But here's the interesting pattern. No reserve currency stays on top forever. Each of these transitions followed a remarkably similar script. First, the country issuing the reserve currency enjoys extraordinary privileges. It can print its currency to pay its debts, maintains low interest rates, and finances its lifestyle through cheap credit. It's like having a credit card with no limit accepted anywhere in the world. But then, inevitably, temptation becomes irresistible. The country begins to abuse this privilege. It prints more currency than it should. It accumulates unsustainable debts. It loses economic competitiveness. And other countries, observing this degradation, begin to question why they should continue accepting a currency that's being systematically devalued. If you study the fall of the pound sterling as a reserve currency, you'll see exactly this pattern. Britain, after 2 devastating world wars, had become enormously indebted and lost much of its productive capacity to the United States. The world realized that the pound no longer represented the strongest and most stable economy on the planet. The transition to the dollar was natural and inevitable. Today, we're seeing similar signs with the US dollar. To understand what's happening with the dollar, we need to comprehend 3 fundamental principles that govern the destiny of reserve currencies. The first is the debt to productivity relationship. A strong reserve currency depends on the issuing country's ability to generate real value productivity, innovation, economic competitiveness. But when a country can print the currency that the world accepts, it faces a classic moral dilemma. Why work hard to produce value when you can simply print money? The United States, since the 1972, when it completely abandoned the gold standard, has printed trillions of dollars to finance growing budget deficits. American federal debt today exceeds $33 trillion. This represents more than 120% of the country's GDP, a level that has historically signaled serious problems for any economy. Meanwhile, American productivity, while still significant, doesn't grow at the same pace as monetary creation. The second principle is the law of geopolitical incentives. If you understand incentives, you understand behavior. For other countries, especially those with growing economies like China, Russia, and India, maintaining enormous dollar reserves begins to make less sense when they realize this currency is being intentionally devalued through money printing. Furthermore, the dollar has become a geopolitical weapon. The United States can apply devastating economic sanctions simply by cutting off a country's access to the dollar-based financial system. This creates a powerful incentive to seek alternatives. It's no coincidence that we see the emergence of bilateral trade agreements in local currencies, the development of alternative payment systems like the Chinese SWIFT, and the increase in gold reserves by central banks around the world. The third principle is the confidence cycle. The strength of a reserve currency depends fundamentally on the confidence the world places in the stability and competence of the issuing country. This confidence is built over decades, but can be lost quickly when other countries perceive that economic management has become irresponsible. When we observe American monetary policies of recent years, especially during the pandemic, when trillions were created out of thin air, we see a worrying acceleration of this loss of confidence. Imagine an international merchant in the year 1900. He conducted business around the world and naturally kept his reserves in pounds sterling. Britain was the dominant empire with the most powerful navy, the richest colonies, and the most sophisticated banking system in the world. It seemed like a safe and obvious bet, but our hypothetical merchant, if he were observant, might have noticed some troubling signs even then. The United States was growing rapidly. Its industrial production was beginning to surpass Britain's. Its gold reserves were increasing while Britain's were decreasing. And there was an energy, an innovation, an American competitiveness that contrasted with what was beginning to look like British complacency. Of course, it took almost half a century for the transition to complete, but the signs were there for those who knew how to observe. Today, we live in a similar moment. China, over the past 20 years, has grown from a relatively small economy to become the world's second largest. More importantly, in many manufacturing sectors, it's already first. If you visit Shenzhen today and compare it to Detroit, you'll see a powerful metaphor about changes in global economic power. China isn't just producing more, it's innovating. It leads in technologies like 5G, applied artificial intelligence, and renewable energy. Its technology companies compete directly with American ones in global markets. And here's the crucial point. China is deliberately reducing its dependence on the dollar. It has established currency swap lines with dozens of countries, allowing bilateral trade without dollars. It created the digital yuan, potentially bypassing the traditional international banking system. And it continues increasing its gold reserves. The war in Ukraine accelerated a trend that was already in motion. When the United States and allies imposed severe financial sanctions on Russia, cutting off its access to the SWIFT system and freezing dollar reserves, they sent a clear message to the rest of the world. The dollar can be a weapon. This created a powerful incentive for other countries, especially those that might have future disagreements with the United States, to seek alternatives. Russia responded by demanding payments in rubles for its energy exports, establishing new trade agreements with countries like India and China using local currencies, and accelerating its efforts to build an alternative financial system. It's not a question of supporting or not supporting these policies. It's a question of understanding the inevitable economic consequences. If you're an American preparing for retirement, these developments have direct practical implications for your wealth and your financial future. When a reserve currency loses status, one of the most common consequences is inflation. Think of it this way. If the world stops wanting dollars, it means there's less demand for this currency. And when there's less demand for any asset, including currency, the price tends to fall. A weaker dollar means imports become more expensive. And the United States imports a lot, from electronics to oil, from clothing to food. We already see signs of this. Energy, food, and consumer goods prices have increased significantly in recent years. Part of this is traditional inflation, but part is the result of the gradual devaluation of the dollar in the international scenario. If you keep all your savings in dollar-denominated assets, savings accounts, CDs, U.S. Treasury bonds, you're essentially making a bet that the dollar will maintain its relative strength. But if my analysis is correct, this may not be the most prudent bet. Stories of people who lost significant wealth during monetary transitions are common. British pensioners who kept all their savings in pounds during the transition to the dollar saw their international purchasing power diminish drastically. For someone planning to live 20 or 30 years after retiring, a gradual change in the dollar's status can have devastating consequences. Imagine you've saved $1 million for retirement. It seems like a substantial amount today. But if over the coming decades, the dollar loses 30% or 40% of its relative value due to the loss of reserve currency status, your real purchasing power will be significantly reduced. This doesn't mean poverty. It means the lifestyle you planned may not be sustainable. Based on the principles I've described and the historical patterns I observe, I'm taking specific measures to diversify and protect my wealth. I no longer put all my eggs in the dollar basket. I maintain exposure to other strong currencies, euros, Japanese yen, Swiss franc, and yes, even some exposure to the Chinese yuan through specific investments. The idea isn't to bet against the dollar, but to reduce total dependence on this single currency. It's like having insurance. I hope I never need it, but I'm comfortable knowing it's there. A clear lesson from history is that during monetary transitions, real assets tend to preserve value better than financial assets. That's why I've increased my allocation in gold. Not because I believe we'll return to the gold standard, but because gold has historically maintained value during periods of monetary uncertainty. I also invest in real estate in different countries, especially in markets that might benefit from the geopolitical shifts I observe. And I maintain exposure to essential commodities, energy, agriculture, industrial metals. I diversify my investments geographically. I invest in Asian companies that will benefit from continued economic growth in the region. I maintain positions in European markets, and I look for opportunities in emerging markets that can grow regardless of what happens with the dollar. The idea is to participate in global growth, not just American growth. One thing history teaches us is that during great transitions, emerging technologies can create extraordinary opportunities. During the transition from the pound to the dollar, those who invested in emerging American technologies, automobiles, aviation, electronics, prospered regardless of monetary issues. Today, I invest heavily in technologies I believe will define the future: artificial intelligence, renewable energy, biotechnology, and yes, even some selected cryptocurrencies. Finally, I invest in what no monetary change can take away: knowledge and skills. I continue learning about global markets, emerging technologies, and economic patterns. And I advise my children to do the same. In a world in transition, the ability to adapt and understand changes is the most valuable asset. Monetary transitions don't happen overnight. They're processes that take decades to complete. But there are specific reasons why I believe we're seeing an acceleration of this process now. The response to COVID accelerated trends that were already in motion. The United States printed trillions of dollars in a matter of months. This was necessary to avoid complete economic collapse, but it had consequences. Other countries observed this massive monetary printing and made calculations about the future value of their dollar reserves. The technological competition between the United States and China created incentives for parallel systems. When the United States restricts Chinese companies' access to American technologies, China responds by developing its own alternatives. This includes financial systems. China doesn't want to depend on a system that can be used against it. The global transition to renewable energy is changing geopolitical power relations. Countries that traditionally depended on energy imports are becoming more independent, and countries that exported energy are losing influence. This alters global payment flows and reduces demand for dollars in energy transactions. The United States faces demographic challenges similar to those other developed countries already face. An aging population means more spending on health and retirement and a proportionally smaller workforce. This makes it harder to maintain the economic competitiveness necessary to sustain a reserve currency. Based on historical patterns and current trends, I see three possible scenarios for the dollar's future. In the first, and most likely, the dollar maintains its dominant position, but gradually loses market share. Other currencies, especially the Chinese yuan, increase their participation in international trade and central bank reserves. The process takes 20 to 30 years to complete. The dollar doesn't collapse, but ceases to be as dominant as it is today. This is the scenario I consider most likely because it reflects how similar transitions have happened in the past. In the second scenario, less likely, the United States recognizes the risks and implements significant reforms. It reduces the fiscal deficit, increases economic competitiveness, and works with other countries to reform the international monetary system collaboratively. The dollar maintains its position, but within a more balanced system. I consider this scenario less likely because it requires political sacrifices that are difficult to make in a democracy. The third scenario is a tail risk. A crisis, financial, geopolitical, or both, dramatically accelerates the loss of confidence in the dollar. Countries rapidly abandon their dollar reserves, causing a devaluation spiral. The transition that would normally take decades happens in a few years. This is a low probability, high impact scenario. It's the kind of tail risk we prepare for, even if we don't expect it to happen. Studying previous monetary transitions, some practical lessons emerge clearly. People who maintain diversified wealth in different currencies, countries, and types of assets navigated better through historical transitions. Total concentration in a single currency, even if it's the dominant reserve currency, has always proven risky in the long term. During periods of monetary uncertainty, assets that represent real value, land, precious metals, commodities, productive companies tend to preserve value better than financial assets. Individuals and companies that managed to adapt to new realities prospered. Those who resisted changes were left behind, and reserve currency changes don't happen quickly. This gives observant people time to prepare adequately. The key is recognizing the signs early and acting gradually, not waiting until the transition is obvious to everyone. The changes I describe will affect different generations in distinct ways. If you're 5 or 10 years from retirement, you don't have time for big speculative bets. The focus should be on wealth preservation and prudent diversification. A larger allocation in real assets makes sense. Consider gold, real estate in stable locations, and companies that pay consistent dividends. Reduce exposure to long-term bonds denominated in dollars, especially if interest rates are low. If you're between 35 and 50 years old, you have enough time to benefit from the changes I observe. Consider more aggressive international investments. Learn about Asian markets. Develop skills that will be valuable in a more multipolar global economy. If possible, consider career opportunities involving international markets or emerging technologies. If you're starting your career, the changes I describe represent opportunities, not just risks. Learn languages, especially Mandarin. Develop understanding of emerging markets. Build skills and technologies that will define the future. Consider periods of work abroad, especially in Asia. And from early on, maintain a globally diversified portfolio. It's important to put these changes in broader historical perspective. Reserve currency transitions, while significant, are part of larger cycles of economic and geopolitical change. Regardless of which currency dominates the international system, global economic growth will likely continue. Human needs continue expanding. Technology continues advancing. Productivity continues increasing. A monetary transition doesn't mean the end of economic progress. It means a redistribution of where that progress happens. Historically, great transitions create extraordinary opportunities for those prepared to take advantage of them. During the transition from the pound to the dollar, investors who understood the changes and positioned themselves adequately prospered enormously. The same will happen during the next transition. An important lesson is that the future belongs to those with a global mindset. People who think only in national terms miss opportunities. Those who understand global trends and position themselves adequately prosper. Changes of this magnitude can be psychologically challenging. It's natural to feel anxiety when patterns established for decades begin to change. The first step is accepting that significant changes are happening regardless of our personal preferences. Resisting reality doesn't change it, it just leaves us poorly prepared to deal with it. We cannot control government monetary policies or global geopolitical trends, but we can control how we prepare our wealth and skills to navigate these changes. Humanity has navigated similar transitions in the past and prospered. These changes represent challenges, but also opportunities for those adequately prepared. In periods of change, knowledge is power. Continue learning about global economics, financial markets, and technological trends. Investment in education always offers the best returns during periods of transition. Ultimately, what we're witnessing with the US dollar isn't a unique or exceptional event. It's part of a larger pattern that governs the rise and decline of economic powers throughout history. If you observe carefully, you'll realize these changes follow predictable logic. Countries ascend when they're productive, innovative, and competitive. They decline when they become complacent, indebted, and dependent on unsustainable privileges. Global economic power always flows to where the greatest real value is being created. Over the past 75 years, the United States created immense value through technological innovation, efficient capital markets, and a dynamic entrepreneurial culture. That's why the dollar justifiably became the world's reserve currency. But today, other regions, especially Asia, are creating real value at faster rates, and it's natural for economic power to gradually redistribute to reflect these new realities. It's not a question of rooting for or against any country. It's a question of understanding the fundamental economic forces that operate independently of our political preferences. History is an excellent teacher, and it teaches us that adaptability is the key to lasting prosperity. Those who recognize changes early and adapt adequately don't just survive transitions, they thrive with them. Those who resist changes or ignore them get trapped in patterns of the past while the world moves forward. The choice, as always, is ours. We can observe these trends clearly, position our wealth prudently, and develop the skills necessary to prosper in a multipolar world. Or we can hope that patterns established decades ago will continue indefinitely, ignoring the clear lessons that history offers us. If you understand the principles I've explained today, you know which choice makes more sense. The future, as always, belongs to those prepared for it.